Welcome back to the Wealth Hub IQ. Today we're talking about smart budgeting. So budgeting is important for multiple reasons. One of them is if you budget correctly, then that can propel you to a lifestyle that you've always wanted for yourself. Meaning that if you can budget very, very well and keep your expenses low, track your expenses and maintain everything within your limits, then you would easily see that you're able to actually acquire and invest in many more things than you previously weren't able to. Just by you being able to budget, you being able to visualize where your expenses are going, how your expenses are coming in and how they're coming out. By budgeting, you're able to navigate your financial landscape in a clearer perspective. Budgeting can also help you reduce your stress because if you know exactly how much money is coming in, exactly how much money is coming out, you're able to account for a lot of the expenses that you have and a lot of the bills that you have. And as a result, you're less stressful at the end of the month because you know exactly how you're going to delegate your money. You understand how your money is going to work for you. In this video, I'll cover some practical steps to maintain and create a budget that will work specifically for you. Understanding your income. So within your income, there's two main incomes that you need to understand right away. That is your gross income and your net income. So gross income, in summary, is your income before taxes, meaning that is your income before all the deductions come out. And your net income is how much actually lands in your bank account. So for example, if you have a 9 to 5 and your salary is £5 every year, for example, it's £5 a year, that means that your gross salary is £5. But what actually goes into your account may be £4 because you get £1 or 50p that goes to national insurance, another 50p goes to income tax. So after your taxes, you get £4. Learn the difference between the two. So that's the first part of understanding your income. The second part is to understand all of your sources of income and be able to actually account for each of them. In the most simplest form, what I mean by that is your investments. How much do your investments bring in every month or in a certain period? Your salary, how much does that bring in every single month or in a specific period that you wanted to calculate? If you have a side business, if you do side gigs, how much does every single source of income total to? As a practical tip, I would say use a specific metric. So that could be either on a monthly consistent basis or a weekly consistent basis. But however you track your income, make sure you track it on a consistent basis, a consistent metric. For example, weekly or monthly. Just for context, I'm saying this because you don't want to be planning or checking your expenses for the last month and then you go to the next week and you're seeing variances. You need to be specific with your time period so that you can understand how one period of time relates to another period of time, and then you can actually track it back. Then it's more accountable. Then you can do more analysis to understand where you've gone wrong and where you've gone right. Track your expenses. Now, it's very, very important to learn exactly and understand where your expenses is going. In fact, it would be even better to categorize your expenses so you understand the specific categories and how much you can allocate towards each category. For example, if you have fixed expenses, and that could be your utilities, that could be your rent, that could be your car payment, anything that you have on a long-term basis that comes out of your account on a consistent basis. Once you've identified and categorized your fixed expenses, then go on to your variable expenses. And variable expenses are things that tend to change over time. So for example, that could be entertainment. You could want to watch a new boxing show that's coming out or a new football show that's coming out. So that month you pay towards that show, that specific show, but the next month it's not going to be the same. Or a better example would be groceries. You go to the grocery supermarket today and you end up paying $50 or £50, and then you go next week and then there's a bunch of sales, so you end up paying £25. So I have two practical tips here. The first tip is the chances are the money is going to be coming out of your bank account. So what you could do is you could download a PDF statement of your bank account, and from that PDF statement you could either go in and create a spreadsheet for yourself. So once you create a spreadsheet, you literally just write variable costs, fixed costs, and then the list of different fixed and variable costs that affect you specifically. And then you just write the amount associated with each one. Or you could download a budgeting app on your phone, which will likely do this for you. However, you have less flexibility. So whichever one you prefer, you can go ahead with, and you can realize that very quickly you're able to track your expenses in a much more accurate fashion. Set financial goals. Now, we all know the importance of setting a financial goal. When you're clear and you're specific on a financial goal, then you're able to actually work much more consciously towards it. For example, if you set yourself a New Year's resolution saying that you want to go to the gym 3 days a week, then you're able to achieve that because you know the goal that you want to achieve. Or better yet, if you're going on holiday and you want to achieve a specific summer body that you desire so much, you're going to be far more motivated to hit that summer body. And as a result, you're going to want to go to the gym even more. Exact same thing if you want to buy a car. If you want to buy that brand new car fresh off of the lot, then the chances are you're going to cut your coat according to your size, specifically so that you can attain that new car. In that same way, set financial goals. Quickly learn to differentiate between short-term goals such as a vacation to a sunny place or a new gadget, for example, a new phone that just came out earlier this year that you feel like you need to have, and long-term goals such as buying a house or retirement. One thing you'll realize is, number one, if you put pen to paper and you actually write it down, first of all, the power of manifestation, you're able to actually see a lot of the goals that you write down come to pass. You're able to see it turn into fruition. That in itself is so gratifying for the human mind. Second thing that I'll say here is it's very important to write things down, because when you write down clear goals, you realize that as you continue to grow, your priorities continue to change. And you may realize that the goals that you wrote 3 years ago are not the goals you currently have now. And now you're able to shift the goalposts according to how you feel right now. One thing I would definitely say is use SMART objectives, which is specific, measurable, achievable, relevant, and time. Now it's time to actually create a budget for yourself, a personalized budget. So with this budget, you want your income to be allocated towards the different categories that you've identified earlier in this budget. So for example, you could try and introduce the 50-30-20 rule, which is 50% of your incomes goes towards your needs, the things that you specifically need on a day-to-day basis to survive. 30% is for your wants, the things that you would like to have. They're desirable, they're not must-haves, but you would like them. And 20% is going towards your savings and your debt repayment. So the 50-30-20 rule is a general rule of thumb, but you can customize that based on your personal circumstances and priorities and see what works for you based on your income and how you like to spend your money. Monitor and adjust your budget. You need to be able to regularly review your budget, which means once you've actually created a budget, you then go back in time and you look and really review. You actually review it. You say what worked back in this period of time, what didn't work, and then use that knowledge to now go forward and say this is most likely going to work based on what has previously not worked and has worked in the past. Therefore, you're able to actually review on a regular basis. This is the type of thinking that you need to accumulate and cultivate to have a wealth mindset. You need to be able to go back on past decisions you've made, go back on past things and say, you know what, this worked, this didn't work. I'm going to take this from this situation to a future situation in order to benefit myself. That type of continuous learning is what differentiates the crowd. So budgeting is very important to actually remain within budget. However, if you do go over in another budget, it's very important to go under in another budget. Meaning that if you, for example, if we use the 50-30-20 rule, if you've gone on 60% instead of 50% for that 50-30-20, you need to make the 30 and the 20, the subsequent 30 and 20 after that, they have to make up for it basically. So you can't be going over budget in each of the categories. But if you do go over budget in one, then you need to make up for it in the subsequent categories. So as a practical tip here, go on your phone, set a reminder or even set an alarm that just says on a weekly basis or a monthly basis, you're going to have a check-in and a review to adjust your budget, allowing you to see what went well and what didn't go well. So to highlight the key points said today, number 1, understand your income. Number 2, track your expenses. Number 3, set financial goals. Number 4 is create a budget plan specific to yourself. And number 5 is monitor and adjust your budget as you go on. I strongly encourage you to start budgeting today so that you can easily start to see what you can realistically afford in the future. And also, if you want to start to attain some of those big purchases that you really want later on down in life, whether that's the fancy car that you've always dreamt of, or that house that you always drive past, or even take the bus past, if you want to start to actually put that in a plan, you need to start budgeting for that today so that you can actually turn that from a dream into a reality. Thanks for watching. Wealth Hub IQ.